Good afternoon, I'm Bridget Taylor and this is Currency Wars. Today I'm joined by Cilliers from TreasuryOne and Jan-Sluis Cremer from RMB. But first let's have a look at what's driving the currency market this week. In the US, the Federal Open Market Committee statement released yesterday was marginally more hawkish, stating that the committee is pleased with the job growth and the decline in unemployment. However, it did mention that inflation remains below the target of 2%, and the declining oil prices pose a risk to the inflation data in the medium term. The statement also mentioned that the Federal Reserve expects oil prices to rise in the latter half of this year. There was no change in the language related to international developments, and the slowdown in China was not mentioned as a threat. However, the likelihood of the Fed hiking rates in September remains firmly priced into the market currently. Today, the US GDP data will give analysts further insight into the health of the US economy. Meanwhile, in South Africa, we await the trade data out tomorrow, and the weaker oil prices are expected to have assisted this figure. However, South Africa's debt management and the economic imbalances pose a risk to our domestic rating outlook. This week, the rand weakened post the Reserve Bank's decision to hike rates last week, and it remains above that technical 12.50 level. However, an improvement in the dollar outlook and a stronger global stock market sees the currency a lot weaker again today. To have a more in-depth look at the markets, I'm joined by Cilliers from TreasuryOne and Jan. Thank you very much for joining me. So let's have a look at that statement yesterday. It was quite interesting. I think, we're starting to downplay this whole jobs outlook, and it's really centered around that inflation, and that is really the big risk. So if we look at inflation, I think the big driver there is the oil prices. Give us your view in terms of where you think oil prices are going to go for the remainder of the year, specifically against the dollar.
Well, if we look at oil prices, then in the latter part of this year, we're going to see the production from Iran coming on board. So I'm not quite in line with the Fed that says oil prices are going to rise significantly. I would call it below 65 for the remainder of the year.
Sure.
And below that, there's no risk of inflation for the US. And they have also just sort of mentioned that in their statement. They did not bring into the account of lower commodity prices across the board.
Yeah.
And the slowdown of the economy in China.
And that's a big one, Andre.
That's a really big one.
Yeah.
There's no chance that you can grow your economy sustainably with a world economy that's under pressure.
And that we've seen. We've seen it across the board. We're looking at, we've kind of forgotten a little bit about what's happened in Europe and the Greek exit, etc., and that seems to have calmed down. But the European economy itself is also very weak. The Asian economy, specifically driven out of China, weak. That poses risks onto the likes of the Australian dollar and other commodity-based currencies. But also, if we look at the US dollar itself, Jan, it's a strong currency right now. So that also speaks to lower inflation. What is your view in terms of how the market perceives the US economy? Is it disconnected from the global economy, or do you see it as just as a function of interest rate increase expectations?
Look, I think, Bridge, they have become a little bit, removed away from the rest of the world. We've seen a rout in the Chinese stock markets of like 30% in the last couple of weeks, which is actually huge. But given the fact that it did double in value in a very short time, I suppose a pullback is, can be expected at some point. But the slowdown in Asia, the lower commodity prices, we spoke about oil earlier on, below $65. Where it's going to increase later on in the year, I don't know. Maybe going into the winter months again, we might see a bit of demand for oil and as the northern hemisphere gets colder. But certainly the US is looking disconnected at the moment. And, you can't go into a hiking interest rate cycle with low commodity prices, a strong currency. They actually need the currency a lot weaker.
Yeah.
So it's all going to work. If they start hiking as soon as September, as the market is pricing in,
yeah,
I think it's going to start hurting that economy more than doing any good for the rest of the world.
Well, this is the thing, and I think that there's been a lot priced into this hike in September. If you look across all the analysts, everybody's calling for over 50% likelihood of a hike in September. But as we were saying, the real thing to keep our eyes on now is obviously the GDP numbers and the inflation numbers out of the US. So we've got GDP out later today. What is your view in terms of the growth outlook in the United States?
I think they're on a path of growth, but I just want to come back to this disconnected. Is their economy disconnected from the world economy, or is it disconnected by market analysts and market participants.
So it's the sentiment.
The economy as such is not and can never be disconnected from a world economy. An analyst can oversee it and disconnect it, yes, but not the economy as such.
Well, that's the thing, and I think that that's what we talk about often on the show, is how market sentiment often drives outcomes. You know, I mean, we all have, as we were saying, the market's priced in this move. So you're seeing the stronger dollar. You're not seeing hugely robust growth. We're not seeing wage growth in terms of the actual number that people are paid on a weekly basis. However, that's almost been discounted, and now it's a concern around inflation. But the market is still pricing for that interest rate hike. So therefore, am I right in assuming that the risk then is that they don't in fact hike in September? Talk to us about what that possibly can mean.
Look, I certainly think, you know, the risk is on, and yeah, it's 100%. I mean, you know, us as market analysts and all the others, I mean, it all becomes a bit of a self-fulfilling prophecy towards the end of the day. And should the US not hike, because, you know, everything's pointing towards, you know, the not wanting to hike as soon as September. And I think, you know, what's going to happen if they don't hike in September, you know, analysts are just going to then push it out to November. But you will definitely see a correction in the dollar, because everybody's buying US treasuries and taking their money out of emerging markets, putting it into the US on the expectations that interest rates are going to go up. And if they continue to stay where they are, well, you know, money's got to find a home and money's got to work for you. And at the low interest rates, earning nothing, you're on a losing wicket. So money then, if they don't hike in September, well, definitely you'll see it flowing back into the higher yielders.
So let's bring it back home now, because as you mentioned, I mean, the dollar remains strong. So we've seen the Rand post that meeting last week where we saw the interest rate hiked. We did see the Rand bounce up to sort of that 12.58 level, and it's kind of hovered between sort of 12.50, maybe as high as 12.62 over the last week. Just with regards to the imbalances in the economy, and we look at what the Finance Minister Nene talked about in Lekotlo with regards to the growth outlook in South Africa and the imbalances that we're seeing. Andre, what do you think in terms of this oil price? Do you think it's going to be a positive thing? And how do we, as South Africans, position if in fact they don't hike in September?
If they don't hike in September, then I think with the interest rate increase that we've had as a high yielder, we look very positive, firstly. Secondly, with the start of the week, Mr. Nene coming out and actually saying, guys, we are responsible for some of the negatives in this economy as the ANC, as I say, that makes in the start of the week. That's the filtering of we need to change, we need to do things is filtering through.
And it's good because it's a sign of accountability, and that for me is like a very, very positive statement coming from our Finance Minister.
And if we can believe everything that they say, then Medupi is going to produce a little bit more sustainable power from the end of this month onwards. So, you know, we are addressing some of our problems. But once again, we are not disconnected from the world. We're not suddenly going to start growing at 3 and 4% with a world economy that's under pressure.
But like we were saying earlier, I mean, it does help some of our imbalances. So if we look at our debt levels, this lower oil price does help to narrow that deficit a little bit. It just gives us a bit of breathing room. If we don't see a hike in September, that'll hopefully see some form of movement back into the South African bond market, back into the Rand, and support the Rand. Do you think that this is going to be a short-term play that we should be taking advantage of, or do you still feel that there is that weaker bias underpinning the Rand?
No, look, I mean, I think at the moment the Rand is struggling on the top side. You know, we saw the 25% base interest rate hike last week, and everybody kind of always expects, you know, Rand to strengthen immediately afterwards. We saw the reverse, and you know, a lot of analysts are sitting there scratching their heads going, you know, well, this has moved in. What
happened?
Yeah. You know, my economics textbook says, you know, that the Rand should strengthen, and it's actually gone the opposite direction. However, you know, I think we're in line next week for about a 45 or a 50% cut in fuel prices domestically. We've got the 25 basis point hike in the interest rate. So overall, you know, and if, as Andre says, if the US doesn't raise rates in September, well, it all points then for the Rand to start moving stronger again, because it's becoming very expensive to be long dollar Rand.
Well, that's the thing. And I think, you know, just to kind of wrap it up before we go into the big guns, is, you know, the US economy is maybe a good litmus in terms of what happened with the Reserve Bank. Everybody was pricing in, had already pre-priced in the likelihood of a hike. There was a little bit of uncertainty just prior to the number, but I think a lot of people were kind of expecting it. Once it came through, the market actually did the opposite and it weakened. And we could potentially see the same thing in the US. If they don't hike, and the market's already pre-priced that, the knock-on effect of that can be a lot more dramatic than I think that maybe the market's anticipating. So let's finish it there. I'm going to give you a couple of seconds just to consider your view for the week. So now that we know where we stand, we are going to put our you-know-what's on the block. I'm going to start with you, Jan. Do you want to give us your view of where the currencies are going to trade?
Yeah, look, I mean, I think the dollar rand at the moment is sort of on I suppose, a delicate knife edge. I think if we get a close today through the sort of the 1262s, 1264 levels, we can move back up to the 1270s, and the doom and gloomers are calling it on to 13 and beyond. But having sort of gone through our discussion and from earlier on and just look at it and take a step back for a moment, I actually wouldn't be surprised if we actually see some strength coming into the rand in the next week or so.
Okay.
And certainly, let's see if we can try, and we tried last night to get through that sort of 48.50 level. And, as I say, we don't get that higher close today, definitely 48, and even down to the sort of the 22s becomes, a bigger picture in play for the rand. So it's very much reliant on where we finish today, but I personally think that in the next week or so, stronger rand is coming our way.
Okay, Andre?
I'm going to say that the rand could be in a range of 1240 to 1270, and immediately at the advise exporters, bank your money, take advantage. There's forward points on the table that you can also take off and bank it. So look at banking some of your money. As far as cross rates are concerned, I'm going to call 1370, 1390 on the euro rand, and 1955, 1980 on the pound.
Thank you very much. So in conclusion, the trading strategy for the week looks like we might see a little bit of rand strength coming through. Andre is telling exporters to take your money off the table and bank your bucks. But Jan is also saying look for that 1250 level. That's a big one to watch. If we do start seeing closes below that, we potentially can see back down to that 1232 and maybe even lower. So exporters, take your money, and importers, hold on to your socks. This is your week. Until next week, you are welcome to send your comments or your questions to @CNBC Africa #CurrencyWars410 or to myself @Bridget R. Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.